What's going on, my peeps out there in legacy builder land? Hey, this is your boy Cedric Jenkins coming to you live from his car, his mobile home office. Hey, listen, I'm actually taking a lunch break, and I wanted to put a post out there in the team page, but after I was trying to type it up, it got a little lippy and got a little long, so I didn't want to put a long verbiage post out there because I know everybody's attention span, to include mine, probably ain't gonna read it all and grasp it. So I thought probably the next best thing to do is do a video. I'm not too much of a video guy. If y'all haven't noticed already, I'm not too much of a video guy. I'll do a webinar quick and easy, but just doing an informational video, I'm not good at that. That's a skill set that I'm gonna have to improve on. So that's something that I have on my list to do for improvement for 2017. So let me just go ahead and just get started on that, on improving that. But the reason why I want to pop on is that I want to just bring about awareness. So just understand, this is not a video about ranting and raving, but this is just about providing some awareness. Listen, y'all, we have to understand the type of business that we're in, right? And what I've noticed is that we have a good amount of people who are inactive, right? And here's the thing about being inactive. It kind of prevents you from doing, or actually prevent you from running a business successfully, right? So there's three things. I got some notes here that I've written down, but there's three things that's going to stop you from, or hinder you from doing, if you're inactive. One, you won't have access to your membership, all the products and services that your $34.95 is paying for, right? Listen, remember, I've always said membership has its privileges, right? So we have to understand that our privilege that we're getting here is the education. No other business, no other home-based business is providing you financial awareness. This is where we're going to get our financial IQ risen, is through empowerment. We all understand that education is key, right? Otherwise, we wouldn't be going back we wouldn't go to school for a bachelor's degree or a master's degree or a PhD or a second master. We value education, so that's what we get here. We pride ourselves on the education, and that's our product that we share with others. So is the education. So one, you don't have access to your products and services. Two, let's see. If you're a business builder, meaning you do a lot of sponsorship, if you're inactive, you will not be able to get credit for your sponsorship, meaning your business income, commission checks won't get cut to people who are inactive. Okay, they go what you call into a commission hold status until you become active, right? Or if you sponsor someone and you're not active, guess what happens? Your upfront bonus check rolls up to your upline. Okay, we've seen that happen before. So you don't want that to happen. You want all your sponsorship. You want to get credit for all your sponsorship, meaning your $50 builder bonus that you'll be getting for sponsoring everyone in. Okay. Three, the last thing, and this is huge. You won't have access to your cash flow management software. Okay, this is the software where we keep track of all of our business deductions, right? Because at the end of the year, we're going to take those business expenses, we're going to claim it on our taxes as itemized deductions. That's going to give us tax savings. Let me give y'all a scenario, okay? Here's the thing. Let's just say that you're on your regular job, you're earning $35,000. Okay, a year. So at the end of the year, when you get ready to file your taxes, see, tax season is about to get ready to come up, and I want to prepare you all for this, right? So let's just say these are just numbers, okay? These are just numbers, but just to give you some awareness, you're earning $35,000 annually at the end of the year. Okay, you're gonna report that on your taxes as gross income on line 7. All right. So if you're not in the business, if you don't have a home-based business, the IRS is going to tax you on that $35,000, 30%. Okay. So in essence, that 30% that government is going to tax you on, that's going to run to about $10,500. They're gonna tax you on. So instead of bringing home $35,000, you're only going to bring home $24,500. Even though gross, you're reporting $35,000 on your taxes, but in essence, you only bringing home $24,500. Okay, that's the government taxing you 30% if you're not in a business. Okay. So this is what we're trying to educate folks is you have to be able to lower your adjustable gross income. And if you don't have a way of doing that, then the government is going to get all your money. Now, let's go to the business owner. Same scenario. Let's say that you're a business owner part-time and you got a full-time job. You're earning that same $35,000. Okay. But let's say in this scenario that you accumulated $15,000 worth of business expenses that you're going to write off at the end of the year as itemized deductions. So instead of, like in the first scenario, that taxpayer is going to get taxed on all of that $35,000. But as a business owner, if you claim $15,000 in itemized deductions, instead of you being taxed on $35,000, you're only going to be taxed on $20,000 because of the fact they're going to take the $15,000 and subtract it from your total amount of gross income that you reported, which was the $35,000. So you essentially just gave yourself an adjustable gross income of $20,000, right? So your business gave you $15,000 in tax savings. Now here's what you need to understand. That $15,000, what does that mean to you in a tax refund? Okay, for every $3 in itemized deductions, you'll get $1 in tax refund. Let me say that again. For every $3 you have in itemized deduction, you'll get $1 in a tax refund. So if you take that same $15,000 as a business owner that you're going to claim on your Schedule C, that $15,000 will allow you to get $5,000 in a tax refund. $15,000 will allow you to have roughly right at $5,000 in a tax refund. Now, let me ask the question. Does it pay for you to lose $15,000 because of the fact that you're inactive in your business? Can you afford to not have $5,000 that can be right in your pocket, cash, in a refund? Is it worth being inactive in your business? If you can afford it, then maybe the business is not for you. But I beg to differ. I thought that everyone who came into the business were looking for ways to keep the government out of your pocket, because truth be told, the only one of the biggest way to keep to talk about gaining wealth is to keep your money and keep folks from getting to your money. The government takes the biggest chunk from your earned income. Okay, so why throw that away by being inactive in your business when you know you could potentially get $5,000 in tax refund back in your pocket at the end of the year, but you're inactive in your business, so now you don't have access to your itemized deductions at the end of the year because you're inactive. Okay, so it's, to me, and I'm a six-figure income earner. Okay. And I don't brag about that because it just look good on paper. All that simply means is the IRS, if I don't have a way to lower my adjustable gross income, the IRS is licking their chops waiting for me to file my tax, because they going to tax me on every bit of my six-figure income, right? It doesn't matter what your income level is. The goal is you want to minimize the amount of times you have to keep the government out of your pocket. That's the main goal. Whether it's six figures, whether it's $50,000, whether it's $35,000, whether it's $20,000, it doesn't matter. Okay, it doesn't matter. You want the government out of your pocket. So for me, I can't afford to throw away $5,000 cash that I can be putting in my pocket year in and year out because of the fact that I have a business. I can't afford that. I can't afford that. I've gave away $375,000 before this. I'm not trying to give away any more money to the government if I can help it, y'all. And I want y'all to think about that. These are numbers, right? These are numbers I want y'all to think about. Is it worth not being inactive? And see, simply when you're inactive, that simply tells me you're not plugged in and you're not getting empowered. You're not getting the information to change your situation, right? And then when your situation is not changing, then you go from inactive to cancel, because then in your mind you're saying this doesn't work. I'm here to tell you it works if you work the strategy. Okay, you have to work the strategy. This business, see, a lot of folks tend to think that it's the company or the products and services. Is not that at all. It's your ability. This is all self accountability, because you're going to learn some principles. You just have to learn discipline. You have to learn some discipline enough to implement the principles, right? Look, this changing your financial outcome is not a magic pill. There's no motion potion kind of thing. You have to take some assertive action in order to change it. Okay, you have to take some assertive action to change it. So I want y'all to think about your status. If you're inactive, you're inactive, right? Get back active, right? There's two ways you can do that. You can go back in your back office and update your credit card information, right? Or you can go to you can call corporate office, the associate services, and their number is 678-619-4929. Give them a call and have them get you back active, right? Don't worry, you won't have, if you've been inactive for a little while, and you don't have to pay any membership in arrears. You just pick up where you left off at, right? And then now you gain access back to all your products and services. But the main thing is you have access back to your cash flow manager, because now that's where your money is. That's where your money is, folks. You got to learn how to go into the enemy's camp and get what's rightfully yours. We're showing you a strategy approach to do that. But if you don't want what's rightfully yours, I can't make you go get it. You have to want it yourself. All right. You have to want it yourself. All right. So listen, we coming up on the end of the year. Just know that when you start the business, you can go back at least 60 to 90 days to keep track of all your expenses. Right. So don't throw away 60 to 90 days worth of expenses, because that could equate to that $15,000 I mentioned in the scenario. Couldn't you use $5,000 extra in your pocket in a tax refund, right? You're paying less in taxes, but you're still getting a tax refund. You paying less in taxes and still get a tax refund. Okay? Because if you're not getting the $5,000 in a refund, that means you're overpaying $5,000. Okay? Would you rather get a $5,000 refund, or would you rather overpay $5,000 in taxes? It's your money. You can do what you want with it. I can't tell you what to do with it. All I can do is tell you the facts, give you the data, and let y'all make your own decision. But in my mind, $34.95 is not a bill to me, and it shouldn't be a bill to you all. It's a business expense that you're going to be writing off, but it's also going to allow you to get $15,000, $20,000, $30,000 in tax savings. Whatever that number may be, is all about you keeping up with all your expenses. Okay, that's the main thing, is you having the ability to accumulate your business expenses, and then at the end of the year, claim them as itemized deduction so you can get you some tax savings. That's why we came into this business, y'all. That's why we came into this business. So again, I just want y'all to think about your status in your business, where you are in your business. If you are inactive, please, by all means, go back and get yourself inactive, because at the end of the year, when you get ready to start doing your taxes, somebody gonna have a long lip. I promise you. I witnessed this last year doing people's taxes last year, and they did the bare minimum when it came to keeping up with their deductions. And when they didn't have enough deductions that gave them tax savings, now they griping. They lip longer than Methuselah. They lip longer than the street that's out here, because of the fact that they didn't benefit from the tax savings. Well, they didn't do the due diligence. I don't want any of y'all to be in that situation when you get ready to do your taxes this year, okay? I don't want no one to be in that situation where they say, this business didn't work for me. I'm not benefiting from this business, okay? If you got any questions, feel free to call me, inbox me, email me, things of that nature. All I want to do is provide some awareness for everyone to understand it's not worth being inactive in this business when this business is going to help you put $5,000 in your pocket. Okay? So let me get on off here. Let me go get me something to eat so I can get back to my desk, and I will talk to y'all later. Excuse me.